Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 22nd of June. Been another interesting week on the coronavirus front. On the one hand, of course, we've had this breakthrough on the steroid basis in the UK, with also some promising signs coming along in terms of a vaccine. On the other hand, we've seen another outbreak in parts of China, Beijing in particular, and of course in the US. So with the COVID-19 situation very finely balanced, so go the markets. Actually been a fairly good week for markets. We've had a situation whereby the Bank of England continues to join the stimulus party. It's pumped in another £100 billion of QE, which takes the figure to £300 billion since March, and indeed leaves the current balance at around £745 billion. We've also had some stonking US retail sales, which followed up on the positive shock of those non-farm payrolls, and there are still hopes of a further $1 trillion of infrastructure spending coming from the US government. So in terms of the markets and the year to date, the Dow Jones is currently down just under 9%. The S&P 500 is down just under 4%. The Nasdaq continues its march ahead. It's currently up nearly 11% in the year to date, and the FTSE 100 down 17%. So turning to next week, there's a few companies reporting which should be of interest, kicking off with full year numbers from Royal Mail. Obviously, what we've been seeing over the last few years is this very difficult situation the company has found itself in. On the one hand, letters are of course very much a dying breed. On the other hand, we've seen the exponential growth of parcels, mainly due to online shopping, but it's a very competitive space. The Royal Mail, previously a FTSE 100 company, the shares are down around 64%. In the last couple of years. It's had union problems more recently. Its chief executive has been stepping down, and there's always, around any transformation plan, worries with the union. So despite the fact that the shares are up about 20%, admittedly from a lower base in the last 3 months, those full year numbers will be worth watching. Turning to the FTSE 100, the online car portal AutoTrader will also be giving us some full year results. It's had a pretty good run of late. Since its March lows, its shares are up around 48%. It did a fundraising of about £186 million, which should see it through. It may even result in some M&A activities. And obviously with the showrooms, car showrooms having been open since the 1st of June, it'll be interesting to see how they're looking at the current situation. Staying within the FTSE 100, we're also due a first quarter update from Tesco. Now, if we go back to their full year numbers on the 8th of April, they were in a slightly odd situation. Sales over the real outbreak of the coronavirus had risen by 30%, but so had costs. They needed to take on another 45,000 staff. They needed to reformat their stores and change the distribution chain as well. In fact, they were estimating that the additional costs of those could be anywhere between 650 and 925 million pounds. Not enough for Tesco to abandon its dividend, however, that was maintained. So it'll be very interesting to see, in terms of the trading situation, how Tesco is currently faring. Thank you for watching. Have a great week.